Well, I think so. And you're definitely the expert on this. You've got your thumb on the economy. You know what's going on with investments and interest rates and all the shenanigans the government's pulling and all that kind of good stuff. I think, and I'm probably preaching the choir here, it really is incumbent upon ourselves to take responsibility for our own financial futures because the government ain't going to do it.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are watching and listening to the Financial Survival Network. I'm your host, Kerry Lutz. And hey, we've got a really special guest for you today. Seasoned real estate investor can help kickstart your real estate investing campaign. And his name is Dave Dubeau. And Dave, it's great to have you on the show. So look, you've been real estate investing successfully for how many years now?
Oh, geez, I got started in 2003. That's when it really first took a kick at it. So I've been doing it since then, and the last 10 years, really focusing on helping other what I call mom and pop real estate investors raise private capital so they can grow their portfolios.
All right. So first, you got to start someplace.
Yeah.
Where do your investors start?
When it comes to raising capital, well, it all starts with having a deal or two under your belt. So you got some proof of concept. But you don't need to have decades of experience or hundreds or dozens of deals under your belt. You can get started with that because the statistics I've seen, Kerry, and take them for what they're worth, right? Statistics, is that 95% of the general population has never purchased an investment property. Your own house does not count as an investment property. So if you got a couple of investment property deals under your belt, chances are you're far and above ahead of most of the non-real estate people that you know.
So what kind of properties do you counsel your group to invest in?
I don't. We work with people that are investing in single family homes, multifamily properties, people who are doing flips, people who are doing BRRRRs, self-storage facilities, commercial residential, you name it. In real estate, we've got clients that are doing all of it. So I don't think there's any one particular category that's head and shoulders above everything else. It just kind of depends on where you are and what your goals are.
So you're agnostic.
I am. I got to cover my bases there, Kerry. I can't show preferences. I'm definitely agnostic. Yeah.
Yeah. When it comes to real estate investing. So when somebody is interested in one, do you have a geographical preference? Do you steer people to certain parts of the country, Dave?
No, here's what I do, Kerry. I help people who are already doing deals to do more deals by accessing private capital. That's the whole shtick. That's how we really help our clients, is to find joint venture partners, private investors, private lenders, what have you, so that they can scale their portfolios. They can do more of what they're already doing typically, or they can start doing that next category. They can go from single family homes to small multifamily properties, or small multifamilies to larger multifamilies, because they're able to raise capital to do that.
Okay. And the capital that you raise, private capital,
yeah.
What does it cost usually? What's involved in the transaction?
Well, that's all over the board, because that's the beautiful thing. You're not dealing with hard money lenders. You're not dealing with institutional lenders necessarily. Typically, our clients are mom and pops who are raising capital to do that next deal, and they just don't have any experience with it. So, quite often I recommend people get started by bringing on a joint venture partner. So they've got the deal, they've got the knowledge, they've got the expertise, and they bring on somebody who's not all that familiar with real estate investing, or who doesn't want to do the hands-on work themselves. That person comes into the deal, they bring their money, they bring their credit, and they join forces and they do the deal together. And basically they share in the risks and in the rewards of that deal. So the big advantage is to the active real estate investor, they're able to get that capital without necessarily having to come out of pocket while they're stabilizing the property and, paying an interest rate, they're only paying out when the property is profitable. Now, the disadvantage is you're giving up a big chunk of equity, typically, in that kind of deal. But you know what? Half of something is a hell of a lot better than 100% of nothing. So that's how we recommend newer investors get started with raising capital.
Okay, so with your capital partners, if you will, what kind of returns do they look for, and how much do they finance of a typical project?
Yeah, so again, what we're showing our clients to do is how to tap into their network of friends, family members, coworkers, business associates, people they have that pre-existing relationship with. A lot of these folks aren't necessarily super sophisticated, accredited type investors, so they don't even really know exactly what they're looking for. They just know that whatever kind of returns they're getting in traditional investments suck, and real estate is a better option for them. So again, we highly recommend you don't start off offering specific rates of return. If you're bringing on a joint venture partner, you explain to them, hey, here's what I've done in the past. Here's how it's worked out. If we were to do a 50-50 deal, hopefully it would be something similar to that. Every deal is a little bit different, but this is how it works. So the joint venture partner goes in with their eyes wide open, and typically what they're hoping for, obviously, is double-digit returns. But that may or may not be direct cash-on-cash returns. That could be all sorts of different things through mortgage pay down, property appreciation, depreciation, all that kind of good stuff.
So with interest rates going up and money becoming scarce from bank failures, et cetera, how are you helping clients now? What are their main concerns?
Well, that's why it's even more important to be doing this these days, because a lot of our clients who could qualify for traditional financing before don't any longer because the banks have tightened things up. However, if they bring on a capital partner who not only helps out with bringing money to the table, but also helps out perhaps with bringing credit to the table, then they can join forces, and it's a lot easier for them to qualify. It's a lot easier for them to make the banks happy under their current stringent financial situation.
All right. So kind of your specialty is helping your network, your existing groups, and finding others who can be potential equity partners in your deals.
Exactly. And one of the ways that I always recommend to people, Kerry, that you're an absolute master at is, be seen to get the green. So it's like you can be a very, very astute real estate entrepreneur, but if you're the best kept secret, it's not going to do you much good when it comes to raising capital. So there's all sorts of things that I recommend people do to, number one, kind of get out there and be seen, not necessarily just to kind of expand their reach, but to show people in their network that they know their stuff, right? Because a big challenge a lot of mom and pop real estate investors have is their friends and their family know them as, John the plumber or Jane the receptionist, or whatever they do for their day job or whatever their background is. They don't take them seriously as a real estate entrepreneur. And they can bang their chest and they can talk till they're blue in the face about how great they are. But it's so much more effective if they get featured. For example, if they get featured on somebody's podcast and that other person is interviewing them, then they're automatically elevated to that status of being an expert. So it's not just about the reach they get by being interviewed on somebody's show. Like, for example, I'm on your show right now, and that's going to reach a broad audience, your audience. However, the real impact, especially for our mom and pop real estate investors, is also pointing their network to the show they've just been interviewed on as kind of like, hey, proof, here's somebody that's interviewed me. Check it out. Does that make sense, Kerry?
Yeah, definitely. And so, all right. So do you give guidance as far as what types of deals or how to structure a deal to bring on these outside investors?
Yeah, well, like I say, initially, my usual recommendation is to especially for smaller deals, keep it super simple. If I could wave the magic wand, it'd be bring on one investor partner to do the deal with you and bring them on as a joint venture partner and share everything 50-50, right? So after the investor's initial investment is covered, all of the profits are shared and split 50-50 between the two of you. That's just the simplest way. And it's also, it's more generous for investors and it's lower risk for you as well. Because again, a big challenge that a lot of people have is, especially if they're doing a flip or a burr, or they have to do some renovations on the property, is, they don't want to be coming out of pocket more than necessary while they're repairing the property and getting it optimized, right? So this is a way to lower that risk for them.
Mm-hmm.
I answer your question?
Yeah, I think you covered it pretty well. So it sounds exciting. It sounds like there's a lot of opportunity in light of the current economic disruptions to be doing this, isn't there?
Well, I think so. And you're definitely the expert on this. You've got your thumb on the economy. You know what's going on with investments and interest rates and all the shenanigans the government's pulling and all that kind of good stuff. I think, and I'm probably preaching the choir, it really is incumbent upon ourselves to take responsibility for our own financial futures, because the government ain't going to do it. I'm up here in Canada. It's the same thing as in the States. Too many people rely on the government, and that's, in my opinion, a very, very bad plan. So again, what I'm showing our clients, our real estate investor clients, is how to educate their network about the big benefits of investing in real estate compared to so many of the other traditional investments that are out there, all of the things that are rammed down their throats that they should be doing, like putting all their money in mutual funds with a financial planner, which I think is generally speaking a pretty bad idea.
Okay. So yeah, obviously stock market's so volatile. You still feel that pretty much real estate is the best long-term investment with inflation, with high interest rates, with a potential recession. You're still avowed real estate investor?
I am. I'm personally, I'm a more of a long-term buy and hold kind of guy. So if you just look at it historically, if you buy a good piece of real estate, you hold on to it long term, unless you're in an absolutely disastrous area, even if you look at the markets that took the biggest hits in 07, 08, if you held on to those properties long enough, they would get turned around. So really depends on what you're doing, how you're doing. But I'm such a big fan of real estate, Carrie, because there are just, with a good deal, there's so many different ways you and your investor partners can make money. And there's so much more control, relatively speaking, that we can exercise over this asset versus pretty much anything else out there that I'm aware of, at least. So, I mean, we control what we buy, to a certain extent, how we buy it. We can negotiate the price quite often to a certain degree. We determine exactly what we're going to do with that project, what that property, how we're going to make improvements. We determine to a large degree who we're going to get in there, how we manage that property, how we exit it, maybe not exactly when, but how we exit. We could have multiple different exit strategies for that property. And then you and your investor partners, you benefit from, well, depending on the deal, I'm aware of up to 8 different profit centers in a real estate deal. Like cash flow is king. Everybody knows that one. That's a cash on cash return that you get monthly, the jingle left over in your jeans, so to speak. Mm-hmm. You've got property, you've got mortgage pay down, you've got forced depreciation. If you get a good deal on the property, you get instant equity in that deal. You buy it at a discount, find a motivated seller. Lots of people do that kind of stuff. You've got depreciation. You've got, all of these different leverage, massive leverage with real estate. I mean, many investments, if you want to buy $500,000 worth of gold, well, guess how much that's going to cost you? $500,000. You want to buy $500,000 worth of real estate, you can typically get into that with between 20 and 30% down. So the bank will finance the rest of it. So just in my mind, so many big benefits to real estate.
Right. And not to mention the inflation protection aspects of it, right? The hedge.
Well, you're definitely the expert on that. That's for sure.
Yeah, well, that's one of the reasons I like it. So any red flags that you tell people when you're bringing on an investor? If you see this, don't do it.
Well, the red flags are usually the person trying to bring on the investor, right? So I see lots of people making all sorts of mistakes around that. And I'm going to cover my butt here, Carrie, and say I'm not a lawyer. I'm not a securities guy. I'm a real estate investor and a marketer, and I'm just sharing my understanding of things. So get your own appropriate legal advice. I'll let cover my butt stuff. But bottom line is, what I see so many people making mistakes because they're a mom and pop real estate investor and they're soliciting capital online. Like they're posting on Facebook, hey, I've got this great deal, guaranteed 14.75%. DM me for more details. Well, that is, so many people do that. Everybody else thinks it's okay, but it's not. I mean, that is illegal. And if you get caught, it can be very, very painful for you with the Securities and Exchange Commission. So that's a big mistake I see people making. The other mistakes I see people making are of ignorance more than anything. And I've made these mistakes myself. So when I was first trying to raise capital, I would show a potential investor my best deal ever. Why? Because I was so damn proud of that thing, right? So I'd show this, hey, here's how smart I was. Here's how great we did. Here's how much money we made. And it was so profitable. And, I was kind of beating my own chest, showing my prettiest baby, so to speak. However, one or two things would happen. Either number one, the returns would be so much higher than a non-investor type person's accustomed to, that their BS meter would go off and they'd say, this guy must be full of crap. There's no way, I'm only getting 3% on my money in mutual funds. There's no way you can be getting 20, 30, 40% returns kind of thing. He must be full of crap. Or it would set up very unrealistic expectations, right? So now they're pinned in at this expectation of the kind of returns they should be getting. They invest with you, and if your deal doesn't bring those kind of returns, then you look like a schmuck, even if the deal did pretty well overall. So what I always recommend to people is don't show off your best deal ever. Show off kind of a plain Jane type of a deal that's got decent returns, but nothing too crazy. And then do old Tom Peters' advice there, under promise and over deliver. So if you're showing people that, hey, we're thinking we probably will be able to get you, 10 or 11% return on your investment all in, not cash on cash. But if you look at everything over this time frame, should be able to do that. Well, then if you're able to get them actually 15 or 20%, you're going to look like an absolute rock star. Yeah, you're a hero, right? And they're going to reinvest with you and they're going to refer you to their friends and their family and all that kind of good stuff.
I gotcha. That's fascinating. And so to give us an example of an average deal that you've pulled off recently that you've helped facilitate.
Well, it's kind of interesting. Yeah. Not one specific deal, but I got a couple that pops into mind. I just interviewed the other day. They took some of our training and then applied it, which is the most important part. And they basically, the big light bulb moment for them, Gary, was how they were bringing investors on board. Because here's my philosophy. All of the real estate gurus out there say, hey, just find a good deal and the money will find you. And I say that's a croco, horse hooky, right? That's bull, right? Yeah. What you want to do is you want to get investors lined up first, then go finding deals. And then that way you're not scrambling for the cash last minute. Because if you're scrambling for the cash, that no matter how good the deal is, the desperation oozes out of you and it actually turns people off. So what this couple was struggling with was they were connecting with potential investors, but they weren't getting any real bites, right? They're getting a lot of people saying, hey, yeah, sounds good. When you got a deal, let me know and I'll take a look at it. Well, guess what? Then they go out and look for deals and these people would all flake out. They say, oh, no, sorry, I can't do it, blah, blah, blah. So what they learned, what I showed them how to do is instead of just getting a soft verbal commitment, what you want to do, you guys, is get a signed expression of interest, a signed expression of interest. This is a non-legally binding document. But I tell you what, the difference between somebody signing off on a document that says something like this, I, Dave, am ready, willing, and able to invest a sum of up to $100,000 with Carrie if he finds me a real estate deal, sometimes within the next 6 months. I date it, I sign it, you sign it. The chances of me coming through when you bring me a deal rise exponentially. So these folks implemented that, and within a couple of months, they got over $600,000 worth of capital committed, and they were able to do their next 2 deals because they pegged people down with these expressions of interest.
I like it. I like it. All right. Well, Dave, it's been a pleasure speaking with you. Why don't you tell us where we find you, how we connect with you on the web?
Oh, thanks, Kerry. So what I'm looking for is I'm looking for other real estate investors who are interested in gaining some exposure by being interviewed on a podcast. So I've got a long-running podcast called the Property Profits Real Estate Podcast. So I would like to invite your real estate guests to be interviewed by me on my podcast. And that's a great way for them to, number one, get exposure, but more importantly, number two, to be able to kind of indirectly strut their stuff and be seen as a legitimate real estate professional in the eyes of their network. So if any of your folks are interested in being interviewed, love to do that. They can check that out at daveinterviewyou.com, daveinterviewyou.com.
And there's a link to that in the show notes on financialsurvivalnetwork.com. Make sure you go there, sign up for your free newsletter. Dave, been an absolute pleasure. Thanks for stopping by.
Thank you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.